Now let's take a look at the bigger picture. David Stryzewski is with us, CEO at Sound Planning Group. Good afternoon to you, David. How are you feeling about the market overall?
Well, great to be with you. The market's doing what it does. We get these headline reads, and then things begin to rally. Doesn't matter that we started out Monday with the highest VIX spike that we've seen in a long time. In fact, there's only 3 times we really saw significant increases like this before, and and everything goes off to the races again here. So I don't know. I kind of feel like. Maybe like Bernie Madoff's giving me like my financial performance on everything. And I don't know how good I feel about the numbers that are kind of coming out when headlines are consistently off and revisions are there. But, we don't make adjustments relative to these revisions. So I just think the data is going to be catching up with us at some point, although we might see a melt up as we're looking at this week that might last for a couple of months. We're in an election year after all.
So do you feel like the market's running a little too hot? You called it a melt up like we saw this week. I mean, this was the best week of the year, right? The Nasdaq's up 5.5% this week. Do you feel like it was too much? Are you worried we might see a pullback next week or just volatility?
Well, expectations through fundamental valuation said that we should be getting about 7%, from the S&P this year. I've got portfolios that are in the high 20s right now, and so they're comparing to the S&P, and so we've way outperformed what expectations were. So, are we overvalued? I mean, technically, if we have major pullbacks, we hit essentially what valuation was supposed to be. So, things have run hard. They're at the top. I do think that we're seeing some rotation right now, specifically to safer places. I think that there's a lot of people today that are concerned because they saw the volatility go up on Monday. They're concerned that things are getting a little bit long here. They're concerned about all the volatility that we saw in July with, presidential debates, assassination attempts, Kamala Harris getting a whole new, look on the internet, et cetera. So she's now some new individual. It's almost like we're not paying attention. There's a lot that's taking place right now, and I think that the average consumer definitely recognizes that their check's not going nearly as far anymore, and that's why Walmart, had such an amazing week this week. But places like Starbucks. That have otherwise seen great strength and people going there consistently for their coffee. They saw some pullbacks along with Home Depot. So that's telling me that the consumer is getting a little bit stale here, and I'm concerned that that's 70% of our GDP.
And you're concerned about the rotation into some of the safe havens that you said bonds may not be as safe as you once thought. And what is that about? What is it that you mean specifically?
Okay, so, if we look at junk bonds specifically, junk bonds, I don't even think that the premium that they're paying is even close to the risk that's actually there right now. Just think about it like this. If you can't make it as a corporation at 4% and 5% rates, how in the world are you going to make it when credit gets tight or liquidity is less at 7, 8, 9, 10% rates? Even with the U.S. government right now, our third highest expense today is our treasury debt. You show me any company where their expenses for interest rates to keep their business going is a third or the third highest thing. I'm going to tell you that this is an organization that's going to be going out of business very soon, and that's a scary reality. Of course, with the United States, we get to print money. And we've got, the world's reserve currency and asset class. But businesses do not have this. Families do not have this. And this is a scary moment for those that don't know what to do and find themselves without a lot of options.
Right. Understood. I mean, when you think about what investors should do, versus shouldn't do, tell me a little bit about what they should do. What kind of sectors or specific names might be working? All the Mag 7 are higher this week, so for all the worrying there, tell me a little bit about where you think it might be headed.
Okay, so I've got 30 different portfolios. I'm going to just share with you that I believe that we should be taking a pause right now on the Mag 7. Not to say that these companies aren't going to continue to lead in different ways. I do think that there's going to be some different leadership, and there might be some stalls and whatnot here because they've grown so much. The opportunities are right now in metals, in my opinion. We're looking at gold at over 100 here today, so it's at an all-time high. I'm going to mention again, silver is at a 40% discount to this, so that is a massive opportunity in my opinion. The miners are likely the way to play these going forward. So a couple of names like HL, Rio Tinto. Are names in mining that I personally think are good, but you can do great with an index as well and leverage somebody else's expertise in finding names. I think healthcare's got a lot of great opportunities as well, especially because AI is bringing some innovation in. And so, as I'm looking at different healthcare names today, I have a name for you that's Veritex Pharmaceuticals, VRTX. This organization is an innovator in what are specifically like significant issues that people are dealing with, and they're trying to find, sort of the needle in the haystack. AI is really going to improve their efficacy in this, I believe. Now, there's no dividend in this particular player, but their profit margin, net profit margin, is 38.5%. So I think that that's a very healthy operating expense ratio, and I think that that innovation is really leading them in the right way for that. And then the Rio Tinto as well is going to do well with AI because they're really an accumulator of different projects, and they put teams in the mix of it. But they got a 6.2% dividend right now, and so I think that's a great name with a 21.5% net margin profit. So these are a couple of names I think are solid. You're certainly going to be seeing, the treasuries being okay places to go right now, specifically on the short side. On the long side, as we're seeing the rates come down, that's gonna see some numbers too. But here's where I have the biggest concern, and I apologize for taking a second to say this. And that is this. When we continue to print like this, I believe that it's putting our credibility as the world's reserve asset at risk. And I believe that the 10-year treasury is being questioned right now. That's part of the reason why gold is as high as it is. And so that's a big concern for us because we have the printing press and our wealth is essentially based on this fact. So anyway, we'll continue to watch these things develop. Nothing's today.
Yeah, look, the national debt is a big story here as well, so we'll continue to follow that. So I got your picks. You had Hecla Mining, and that's in the silver realm. Rio Tinto, you like the AI play there with Rio Tinto, and Vertex Pharma with the innovation. Thank you, David Stryzewski, CEO at Sound Planning Group.